historic day on Dalal Street. Markets scaled new highs in what was a record-breaking rally. Hello and welcome to our special show, Bulls Charge Ahead. I'm Lata Venkatesh. With me, Surabhi Upadhyay.
Well, hi Lata, we did see the Nifty scale some pretty historic levels, as you mentioned, climbing past 9,300 for the first time ever. The Sensex is now within kissing distance of the 30,000 mark once again, and mid-caps continued scaling new highs as well. And it's been really an exciting day for the markets and for the bulls in particular. But before we get to all the analysis and the experts, Lata, just your sense, you saw the way trade played out today. Of course, I think last 24 hours have been quite elation and joy for global markets because of the French outcome.
Oh, absolutely.
But was there more to the rally here today, you thought?
Well, obviously the French elections and the fact that the European Union will stay a European Union was triggering a relief rally, but we have not seen too much of FII flows. Even yesterday we saw FII outflows. Ours is very much a domestically bred rally with domestic institutional investors investing a lot, but more importantly the numbers, the results season. HDFC Bank clearly giving that outsized loan growth quarter on quarter and year on year spurred the imagination that other banks are also the Yes and the IndusInds, where we focused more on asset quality, had also actually thrown up a good 20 and 30% loan growth. So that triggered the expectation that probably there are green shoots of growth. Cement numbers, ACC and Ultratech both showed volume growth. And meanwhile, all those Dilip Build, Cons and Jain irrigations were announcing that they got infrastructure orders from state government. So basically, the market is smelling growth. And of course, today you also had Indian Bank abetting this hope by showing at least an asset quality under control. It was already one of the better performing banks on asset quality. It just whetted the market's appetite, as it were. Clearly, there is some basket buying in banks. There is no taking away from that. And it got triggered the moment the HDFC Bank numbers came in. Both that evening, Friday evening, as well as Monday and Tuesday, we have seen definitely some basket buying only of bank stocks. And today, the beneficiary was Axis Bank, as it was even in previous occasions.
Oh, yes, banks leading right from the front. Let's get in
Results
Anuj.
due tomorrow.
Absolutely, yes, the banks in focus, as always in this market. Let's get in Anuj as well, with his sense of what really, triggered and powered up this rally. Anuj?
Well, momentous day for Indian markets. Most indices closing at new record highs. In fact, the Bank Nifty closing about 22,000 for first time. And really, today was about domestic cues. Yes, the global markets also look good, but the way old economy stocks are surging, the way earnings are panning out, the likes of ACC, Ultratech, Indian Bank, Indiabulls Housing, all in all, market is sensing something big as far as the economy is concerned. Also keep in mind, it's an expiry week. You would have this kind of move where any positive move would lead to big short covering, and that's what happened today as well. Banks led from front, so Axis, ICICI, Bank of Baroda were all higher. FMCG stocks made a big comeback, so ITC, Asian Paints, Hindustan Unilever, Bharti Infratel, Mahindra and Mahindra, Hero Motocorp, BPCL, Asian Paints, Ultratech. So across the board, there was big buying. And of course, outside the index as well, there were big gainers like Indian Bank, Biocon, Delta Corp, Bajaj Finance, Jain Irrigation, Mindtree. List was long. The short point here is that the market is going through a Goldilocks scenario. Earnings picking up, cues globally strong, and short covering. And tell you something, 2 more days to go for this series. It's looking like the momentum is firmly with the bulls.
Oh, no two ways about that, Anuj. Thanks a lot for giving us a concise picture of the markets. Let's get to views about where we are headed from here. We are joined by Vibhav Kapoor of IL&FS, as well as Anu Jain, the Director Equities at IIFL. Anu and Vibhav, thank you very much for joining us. Vibhav, are you smelling growth? And is the market higher because precisely it is smelling growth?
I think it's a bit too early as far as result season is concerned. We've hardly had a few results so far. And the market got very enthused, for example, in the cement stocks because of ACC and Ultratech, although the results were not exceptional. So I think more than that, while growth obviously is something which the market has been looking for, we'll see whether that starts or not after we get some more results. I think it's an issue of what we discussed earlier, which is that global growth has picked up. You have almost a Goldilocks type of situation globally. Interest rates are still very low, liquidity is very high, and the same thing is there in India. And this rise of the last 2 days has also been because of global factors in addition to local factors, which is the French elections and the big breakouts you've seen in the European markets, in the S&P yesterday, in some of the emerging markets. So it is, I think, a global phenomena helped by probably the hope for growth to emerge as the result season progresses.
All right, let's bring in Anu Jain as well. Anu, good to have you on the show. 9,300, what are the next levels you'll be looking at?
Well, as Anuj was saying, this is expiry week. If we see the market when it had, last time about 10 days back gone to about 9260 and retraced back to sub 9200 levels, there were a lot of short build up which was happening in the 92, 9300, levels. So there is definite short build up. You've got 2 more days to expiry and you're already trading over 9300. So I think a fresh bout of short covering can take you right up to about 9440. So I think tomorrow a crucial level would be 9330 odd. If you kind of start trading above that level, the squeeze can be very sharp over the next 2 days, taking you right up to 9400.
Vibhav, would you back the banks? The market seems to back the banking sector more than any other.
So the banks is one sector which hasn't moved at all, leaving aside some of the private sector banks. So the market probably is sensing that you'll see some improvement as the result season progresses. And I think they're going to get Axis Bank tomorrow, which will be really important from the corporate bank point of view. So let's wait for that and see how that pans out to be and then take a view.
Similar question to you, Anu. How would you bet on the Nifty Bank now that 22,000 is conquered? Will it outperform Nifty?
Well, in the sense it's been consolidating, it has about 3-4% resistance. Actual resistance is at 22,600 odd. Axis today for the first time showed some kind of a, buying. It was sub 500, close over 500. Obviously, the results would count, but if you look at the top banks, it's also a factor of expectation versus what it's delivered. So HDFC post the last quarter and demonetization, expectations were fairly somber, and post the results, that recovery came in. If you look at same with the NBFCs, not just the banking sector, at demonetization, most of them were kind of dumped in. So, and now you're seeing a resurgence out there, whether it's Shriram Transport, Cholamandalam Finance, Bajaj Finance for that matter. So all of them are basically reversing the move that they did in November, December. And now strength is kind of coming in. So they are all at close to 52-week highs or breaking that. So momentum seems to be strong and it seems to be holding on. So as of now, if one were to look at the Nifty also, it's a momentum market. So I think a fair amount of momentum from the Bank Nifty will continue.
Vibhav, staying with earnings, I mean, of course, Reliance has been its story and people sort of like what they saw. But more than that, let's talk about cement and the cues that gives you, because some of the companies that have reported, they've actually reported better than expected volume growth. Does that make you optimistic that we'll get decent numbers from other cyclicals or infrastructure stocks?
Yeah, I mean, they've reported better than expected volume, but the profits have still been down, costs have gone up. And look where the valuations are. I think they're already factoring in a huge amount of volume growth over the next 12 to 18 months. So, yes, there is certainly some positivity which has come about from the first few results, but we also need to balance that against where the valuations are. So I think this is more a case of, liquidity and, as I said earlier, Goldilocks type of scenario, hope that growth will come back. But at any point of time, you need to be very wary of, valuations when they've already stretched so much. Having said all that, I don't think the markets are going to go down. I think, this momentum and the liquidity probably can carry them even higher, irrespective of the high valuations.
Okay, we would want to know at what high levels you are comfortable, but we'll take that question after a very, very short break. Do stay with us, Anu. Here's some cautious, very cautious opinion from Saurabh Mukherjee of Ambit Capital.
The stock market, by and large, is overvalued. I wouldn't call it bubble territory, but it is overvalued. banks and NBFCs in particular look to be significantly overvalued. Whilst we are saying that a year hence the Sensex should be around 31,000, that's clearly not enough upside to take a conviction buy on the market. That being said, the stock market is not what's worrying me. What's worrying me is the state of the bond market and the elevated levels of pricing, or rather the very fine levels of debt pricing that we are seeing in the NCD market. We've had nearly 4 trillion rupees coming into Indian bond funds and liquid funds over the last 3 years, and I'm afraid that's created a near bubble-like situation